Welcome to another edition of Cattle Chatter. I'm Susan Littlefield with the American Ag Network. Difficult market to read. I like that statement as we look at what we're seeing within this market trade. But if you rewind this show, I don't know what, 2 or 3 weeks ago, Brad was talking about some convergence, and that's where we're going to start out on the trades. Brad Kooima joins us, as always. He's with Kooima Kooima Varilek out of Sioux Center, Iowa. So let's talk about this convergence, north versus south, and what you're seeing at the moment.
Got it. I'll try to. Thanks for having me on. I thought maybe I got fired. I was a little unruly last week, so it's like
we loved it.
Yeah. Well, even a blind squirrel finds a nut occasionally, so looks like we're right on the convergence. I was kind of hoping that I wasn't going to be. And what I'm talking about is, the price disparity that's been for about as long as you can remember, right? Probably a year or more, where the North has carried a premium and at times a really big premium to the South. I've smarted off on your program a couple of times that it's kind of interesting that the regional imbalance in supply is in the South because of the border being closed, especially and particularly Texas, 10 consecutive months of record low placements. The data is staggering when you actually look at it. The placements again last month in Texas, 75%. Texas on feed number is 91%. It's 103 in Nebraska, by the way, and 106 in Iowa. So numbers are up in the north and not at all. And the Texas, particularly Kansas, has actually gotten flattened out where they're a little bit more than a year ago. So they're okay. But anyway, so I've smarted off about wonder why they're not a little higher because they don't do a lot of negotiation down there, of course. But it's finally caught up to us. I was hoping maybe that the South would come up to meet the North. That would be still talking about this, 6th week in a row of 245-ish on cash cattle. But it feels to me like it's a little bit the other way. The South has firmed up with some 242 trade today on quite a bit of it. And the North is trading at 242 to 3. I don't know if the trade is all done for the week, but it feels like it's a long ways toward it. So we basically have, put the two together, still at great levels. I mean, anybody that feeds cattle knows how, this cattle really work just fine here. But that's what's happened. I think there's a little more willingness to sell the cattle in the North too. And we're starting to see the flow, right? I mentioned to you as we were prepping the giant sucking sound in Texas, right?
You look at that.
What I mean by that is the tightness is in Texas. So I'm hearing about cattle that are getting bought in Kansas, getting shipped to Texas, cattle in Nebraska, getting shipped to Kansas, et cetera, et cetera. Okay. So typically that's not bearish. And so, the softness in the futures today is, at the end of the day, it's right, no matter whether you want to argue with it or not. But, usually that sort of action is not bearish. But we shall see. This market obviously is very, very wobbly at these kind of prices, huh?
Oh, definitely. And you talk about the South, and we've had this discussion before. As this border continues to stay closed, those feedlots in the South are struggling to get them filled. And does that put people under? I mean, is there that worry that some of these smaller feedlots might be closing their doors?
It's a crisis is a strong word. It's very, very serious down there. When I talk to some of the folks that I know down there, 100% empty pens almost everywhere, entire feedlots. There's whole industries built on the importing of those Mexican cattle out of there. And so it's very, very real. Now, I asked, are they making up for any of the shortfall with, for instance, the beef on dairy segment? That's kind of a new thing here it's been around for a while, but it's really taken off the last while, right? The last year or two. But clearly by the number of placements, not really. And I think the market's trying to get their mind back around here after the Secretary of Agriculture basically said later rather than sooner. I mean, the solution is a $750 million sterile egg or sterile fly facility. You don't build a $750 million facility in 20 minutes, I mean, so I think a lot of the perception, and you saw that for a while, the back end of the market, kind of got better because I think that a lot of us, me included, thought, well, they're going to do whatever they can to get that open. You can imagine the clamor from the Texas cattle feeders to get this thing open, right? But I don't know the science, and I'm not a scientist. I'm a dumb commodity broker, but it looks to me like maybe now cold weather is the maybe when, right? So if it gets a certain temperature of the soil, those larvae can't live and blah blah blah. So maybe that's what it is. But South Texas, that might take a little while to get that cold down there, right? Chilly here this morning, 44 degrees, but that's enough to slow them down.
Were you surprised that we saw cash take place as early as it did in the South this week?
Shocked, and at steady prices with the highest price of the week before. I was very surprised. And if you're trading futures yesterday, you're sitting here watching cattle futures down 175 to $2, feeder cattle down $4, and then I don't know, mid morning, one of the majors steps up and says, "Oh, we'll buy cattle at the best price that it was last week, 242," and that rallied futures. Because I think the futures trade thought, well, geez, I thought maybe it's going to be a little lower, but it looks like it's going to be fully steady in the South. And so I guess maybe that's a reflection of just on how tight things are down there. That someone was willing to step in front of it on Wednesday, say, well, we got to have the cattle. But you also you got a 416 box. The Packers are actually making a little money here. You call in the sympathy cards, believe it or not. Who'd have thought you could say that, right? Yeah. 242, and they're still making some money. Crazy. So there's all of that. But so that's all the fundamental stuff. And I know people like to talk about it. People like to have me try to think I know something about the fundamentals, and I try as hard as anybody, harder than most. But then you have the other side of the market, right? You got the technical stuff, that red lines and blue lines and funds and HFTs and AI stuff, driven stuff. And I really thought that that's what was happening today here more than the fundamental story.
Well, it's crazy, when you look at this trade on a Thursday and not to see the momentum or the inkling of where this cash might go, even though we had some sales steady in the South. And pretty much, is that where we're going to say the North is going to end up finishing out?
It looks to me like we're going to be 42 to 3, a couple lower than last week. And then we'll see. I still don't feel like there's any real burdensome numbers here. I think we're still pretty current. Although having said that, I do think that there is at least some perspective that feeder cattle are too high for me to buy. The cheapest inventory that I have are the ones I already own. I'm just going to make them bigger. Feed's cheap, doesn't cost $2.42 to put gain on. And so I think I want to be sensitive to that. I don't think we're at a big tipping point there yet, but we're closer than we were a month ago. A month ago, I would have said, absolutely no way. These guys are selling everything with a tailhead and a brisket, and but it doesn't feel like we're quite that current today. And then that brings up an interesting point, actually, Susan. Usually we're talking about the other side of that market. It's September, and everybody's got long-fed calves, and they all weigh 1,650 pounds, and you're begging to get a bid, right? And then you go like, well, if we could just sell a few here, we'd feel better. And then it takes forever. It takes way longer than you think, right? If you think it takes a month to clean them up, it takes 2 months. The opposite of that is also the truth, though, and then that is where we are now. So if you get very, very, very current, it takes a long time for you to get uncurrent. I'm just trying to say the opposite is also true when you're very current, which is awesome. So that's the fun thing about the cattle. You can change supply by 10, 12% just by whether you're current or whether you're not current.
Do we expect a break in the boxes anytime soon?
I do, but it doesn't look like I know anything right now. So far for September, we trade pretty good, but I can tell you that the seasonality is like a 98% odds in September that boxes go down. Maybe this is the exception to the rule. I kind of doubt it. This whole hamburger element of this thing is getting troublesome to me. I don't want to price our consumer out of. It's a big consumer base that we have for hamburger. Let's not lose them. But I would go back to, okay, school's back in session. We're not doing maybe the vacationing, the grilling out, the weekend, the stuff, we're going to a football game instead, and yada, yada. So I would still bet that better chance that the boxes break than that they rally anymore in September.
So you talked about 43 degrees. We know Friday is supposed to be a lot chillier in the north. We've got some great growing weather for these cattle that are in the feedlots. Is there a
But
concern they're going to get too heavy?
yes, absolutely. My dad used to say, growing 4 pounds a day and 2 pounds at night. Um, the the weather is ideal here, and performance is very, very good, and they're getting a Cadillac ration too because feed is quite cheap. So yeah, I'm very dialed into that because I worry. We've talked about this a little bit, and we could spend a half an hour maybe talking about it. And I don't want to do that, but the question for me is: are we killing the available supply or not? Uh, Fed slaughter is down almost 7% year to date. It's September. It's a long time. We're a long ways into the year, and it's almost 7% less. And yet the cattle and feed reports say on feed is 98, 3 months in a row, right? Not even quite 98. I think last month it was actually technically 98.3 if you did the math. But there's maybe more than one reason for that. One of it's cattle and feed is only 1,000 head feedlots and over, so maybe that's some of the overage, and maybe we're just feeding cattle longer.
And who knows, as you and I've talked before, this beef on dairy could have somewhat of an influence as well.
Yeah, I think that's certainly part of it. They go on feed. Somebody owns them for what is it, 411 days or something. Very predictable, very plug and play, like a hotel. Finally, a packer that has got complete control from front end to back end. If we're still doing this in a couple of years, I'll bet I'll be talking about how that became a problem in the cattle industry, the ability to control an inventory like that for 14 months or something like that. Whatever. I hope I'm still around to talk to you, but I hope I'm not talking about that.
We'll have a remember when conversation, right?
Right.
Well, what is the best way for folks to get a hold of you?
Well, you can look at a great little show like this, I guess. I always post it on my own website, kkvtrading.com, but we'd rather have you call. There's 6 or 7 of us here, 4 of us are brokers, 712-722-0023, and we'll visit. Maybe not right at 8:30 for me, but sometime later on in the day is better.
All right, sounds good. And that, folks, another edition of Cattle Chatter.
The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.